So let's get right into it. On the surface, the economy looks amazing, right? The stock market's hitting all-time highs, innovation seems to be everywhere, but if you peek under the hood, you start to see some pretty serious cracks forming. And today, we're gonna figure out what's really propping this whole thing up. You know, the legendary trader Jesse Livermore said this almost 100 years ago, and man, is that true today. It's this constant reminder, right, that whatever's happening now, it's happened before. It's the same old story, just with different characters and maybe a new flashy name.
And this is the big question, isn't it? It's the one that maybe keeps you up at night. You see the headlines screaming about how great everything is, but something just feels off, a little fragile. So what is really going on here? Let's dig in.
All right, so first up, you gotta give credit where it's due. The headlines are shouting good news. The stock market is just absolutely soaring, and all this optimism around AI is creating this new gold rush. If you just glanced at it, you'd think we were in a golden age. But here's the thing, that shiny surface, it's basically hiding some really deep structural problems. It's like this gorgeous mansion sitting on, I don't know, a sinkhole. So let's go find that first big crack. And here it is. This whole party, this entire economic boom, it's being paid for with a credit card. And I mean at every single level. From the federal government all the way down to you and me, the amount of debt is, well, it's like nothing we've ever seen before. Let's start at the very top. $38 trillion. Just try to wrap your head around that number. It's the biggest pile of debt any country has ever had. In all of human history, it doesn't even sound like a real number. And of course, that kind of money isn't free to borrow. Just the interest payments on that debt are now $1 trillion every single year. Think about that. That's more than we spend on our entire national defense. $1 trillion a year, poof, gone. Just to stand still. But hey, it's not just the folks in Washington. We're all playing the same game. Total household debt, another all-time record, $18.6 trillion. It feels like the average person is just trying to keep their head above water.
Now, you know, not all debt is the same, right? There's good, bad, and then there's ugly. Mortgages, that's kind of the good debt. Student loans, we're getting into bad territory, especially with more and more people falling behind on payments. But the ugly stuff, that's credit cards. We've officially crossed $1 trillion in credit card debt. And the number of people who are seriously behind on payments is skyrocketing. We haven't seen numbers like this since, you guessed it, 2008.
Okay, so let's move on to the next crack in the foundation. Because even the stock market, the one bright spot everyone points to, is starting to look, well, a little sick. It's just not as healthy as it seems on the surface. And this chart says it all. The S&P 500 is supposed to be this broad, diverse snapshot of the economy. Well, turns out its performance is basically being held up by just 7 companies. These magnificent 7 make up more than a third of the entire index. It's like you're in a group project and 7 kids are doing all the work while the other 493 are just there. Sound familiar? Because it should. Back in the 70s, we had the Nifty 50. Everyone said they were one-decision stocks. You just buy them and never sell. They were supposedly bulletproof. Sound like anyone we know? Well, they ballooned to almost half the market, and then the whole thing collapsed. A 50% crash. It took years to recover. You know that old saying, history rhymes. And if you need any more proof that things have gotten weird, just look at this case study. There's this company, MicroStrategy. They're supposed to be a software company, but really, they've just become a giant vault for Bitcoin. And the craziest part? Investors are paying 100% premium for the stock. I mean, it's literally like walking up to a cashier and saying, here's $2, can I have $1 back? It makes no sense. So why? Why is all this happening? What's going on in our heads to drive this stuff? Well, it really seems like the stock market has stopped being about investing for the long haul and has turned into a straight-up casino. And to get what's going on in this new casino, you gotta understand a concept called gambler's run. It's simple, really. It's a mathematical fact. If you play a game where the odds are stacked against you, it doesn't matter how smart you are or how lucky you feel. If you play long enough, you will lose everything. The house always wins. And here is gambler's ruin in the real world. There's this whole industry called prop trading that's exploded recently. They sell this dream, you know? Quit your job, trade from a beach. But just look at the numbers. 93% of their customers fail. They lose. Their business isn't about making you a successful trader. It's about collecting fees from the 93% of people who are mathematically doomed to lose.
Okay, so if that's what all the everyday investors are doing, what about the so-called smart money? You know, the huge funds, the big institutions, what are they up to? Well, while everyone else is at the slot machines, they're very quietly slipping out the back door. So where are they running to? They're pouring trillions of dollars into something called private credit. You probably haven't heard much about it, and that's by design. Why are they doing it? Simple. It gives you the same kind of returns as the stock market, but without all the insane up and down swings. It's their escape hatch from all the chaos. And get this, it's not just the Wall Street guys. The world's central banks, the biggest players of all, are getting spooked too. Just look at this. In the last couple of years, they've started buying gold like crazy, 1,000 tons a year. That's more than double what they were buying before. This is a huge deal. It's basically a quiet, global signal that they're losing faith in the US dollar being stable long term.
All right, so let's put all the pieces together. We've got mountains of debt, a stock market propped up by just a few companies, a casino-like mentality everywhere you look, and the smartest people in the room are quietly preparing for a storm. So, what does it all add up to?
I think this quote just nails it. Every time you see a headline about the market hitting a new high or about how strong spending is, just remember it's all running on fumes. It's all fueled by debt. We're basically trading our future stability for party today. And that's really the scary part, isn't it? This whole thing, this entire economic picture is built on one simple hope, that the music never stops, that we can just keep borrowing forever. But history has shown us time and time again that eventually the music does stop. It's like a giant game of hot potato, and you have to wonder, who's going to be left holding it when it all goes quiet?